Heya Cryptozens. Tonight's show: Indian exchanges down 70%. UK government seeks input over DeFi tax. Crypto lender Vauld suspends withdrawals. It's 10 p.m. Pacific time. The date is July 5th, 2022, and welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space in the industry that surrounds it. So take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. every night so that when you leave in the morning, you're taking with you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. On Friday, a new tax went into effect in India. It's a 1% tax deducted at the source, TDS for short. So that's a 1% tax on top of the 30% that the Indian government was already planning on robbing their citizens of this year. And I talked about that 30% tax at the time. In India, cryptocurrency trading is taxed at a higher rate than gambling, higher rate than fantasy sports leagues. And at the time it happened, boom, trading volumes all over the country dropped by as much as 70%. Now, on top of that, there is a new 1% tax. According to a notice issued recently, exchanges are required to deduct taxes from cryptocurrency buyers. That's on each transaction above the regulatory thresholds. And that tax is supposed to be paid directly to the central government within 30 days of when that transaction took place. And on top of it, if it's a direct transaction from person to person, that same tax applies. The buyer is required to deduct the taxes. Also goes for trading. So if you trade Bitcoin for Ethereum, in that case, both parties become buyers. And that means both parties are then subject to taxes at that point. Oh, and the payment is done in advance. That's right. You have to show a receipt or some sort of evidence that the tax was paid before the digital assets can be exchanged. The Indian crypto markets all but dried up at the news. Top exchanges like Withdrawals and CoinDCX saw drops between 10 and 70% of volume in the last week. DCX was the worst off. They went from roughly 6 million on June 28th to 2 million today. 70% drops. Withdrawals was about the same, from 14.53 million one day to 5.36 million the next. BitDNS and ZebPay weren't as bad off, but that's a 90% drop in trading volume since the 30% tax went into effect. Under current conditions, based on their 24-hour trading volume, ZebPay is sitting on a daily revenue of just $678 per day. So, on top of surviving the Terra Luna event, and Celsius, and 3 Arrows Capital, and Babel Finance, and Vauld now, we'll be talking about them in a bit, Indian investors have this new burdensome tax to deal with. So it feels intentional. You know, after all that, and after a 30% tax on top of crypto, they put on another 1% on top. It feels like they're actively discouraging traders and investors to stay away from crypto. Here's what I mean. If you're Indian, you can't avoid that tax, not legally. So you might be thinking, oh, well, I'll go to a foreign exchange. They won't pay the taxes. And you'd be right. They won't. That means you, the trader, would be responsible for paying that tax. So you'd have to figure out the right amount, and then you'd be the one to pay the government for your taxes. This tax scheme goes against the advice of industry experts. CoinSwitch's CEO Ashish Singhal said crypto should be taxed like equity markets, which makes more sense to me. He said, quote, "The crypto market is driven by high-frequency traders like intraday traders in equity markets. These traders operate on an extremely thin margins, and locking up their capital with high TDS will restrict their ability to operate." Which, again, I have to go back to. Maybe that's their intent. I say that because this is kind of a double death knell. It kills the retail traders, a 31% on their income, and they can't even claim the losses? Yeah, in the United States, we claim losses on our taxes, but they won't be able to claim these kinds of losses in India. And then, as the individual traders give up, that pulls down the transaction volumes. And those transaction volumes are very important to some types of businesses, like exchanges. So this definitely puts India at a huge disadvantage in the crypto space. Well, so much for an independence rally. At the time of writing, the global crypto market cap is $905.38 billion. It's down 0.6% in 24 hours. The top 5 cryptos by market cap are Bitcoin down 2.8%, Ethereum down 1.16%, Tether, USDC, and Binance Coin down 0.1%. An open consultation, it's called. Really, it's a call for evidence. Her Majesty's government is seeking the opinions on taxation of DeFi. The announcement said, quote, Her Majesty's Revenue and Customs would like to hear from investors, professionals, firms engaged in DeFi activities, including technology and financial service firms, trade associations and representative bodies, academic institutions and think tanks, and legal, accountancy, and tax advisory firms. And specifically, they're looking for input on the taxation of crypto loans and staking, standard DeFi activities that could cover anything from lending to staking to borrowing, and specifically the tax treatment of DeFi. For example, some of their shareholders have told the government that there are times where the current rules for capital gains tax are inappropriate. They're inconsistent with how DeFi lending and staking work. So, one of the outcomes that they want from this is to, quote, inform the government's options for reducing any friction, including the administrative complexity for some taxpayers arising from the application of current tax law. And in their call for evidence, they lay out their intention to study whether or not the government is strangling a new industry. I mean, they don't say it outright, but that's what they're worried about. Whether or not the administration burden is too high, or whether the costs are too high. And they're looking at whether they can align their taxation methods to the basic principle of DeFi's economics. Looking through their announcement, they have 11 questions, ranging from approximately what proportion of DeFi lending and staking transactions give rise to disposal for tax purposes under the current rules, to does the current tax treatment make the UK less attractive to platforms as a place to do business? If so, which jurisdictions are favored and why? So if you're one of the groups of people that they asked for, you have until August 31st to make your voice heard. The global NFT sales volume is down 5.03% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are Otherdeed, followed by Bored Apes, Moonbirds, Mutant Apes, and Clone X. Now keep in mind, some of these collections have very volatile prices, so do your own research. Old man crypto winner is not taking it easy on anyone, is he? Another example, a new victim, centralized finance lender Vauld. They suspended all withdrawals, trading, and deposits. Yeah, it was announced on Vauld's website. Their announcement read, in part, quote, we have made the difficult decision to suspend all withdrawals, trading, and deposits on the Vauld platform with immediate effect. Immediate effect. So, surprise, which isn't really surprising at all, is it? Now, in case you're not familiar with Vauld, they are based in Singapore, and about 11 months ago, it was announced that they'd raised $25 million in this Series A funding. That funding round, led by Peter Thiel, Valor Ventures, Coinbase Ventures, and Pantera Capital, also took part, and their business model was to operate as something of a crypto-native bank. And unfortunately, they got run on like a bank. Vauld customers tried to withdraw more than $197.7 million since the 12th of June. And like many ventures experiencing issues of late, Vauld was surviving. Back in May, they were boasting a $1 billion. In an interview from May 5th, their CEO said that they were expecting a 5x increase of their assets under management. And at the time, that's not a crazy number. They've done a 10x increase since their launch in 2019 and a 40x in their customer base. In 1 year, they went from $90 million under assets under management to $1 billion. At the time, their CEO said, quote, "We are upwards of $1 billion in assets under management right now. We would like to get to $5 billion as soon as possible. We're trying to make this happen this fiscal. That's five-fold increase, and the rate of which crypto space grows, we are well set up to make that happen." And as you can tell, that's not happening. Not anytime soon, I think. So that was in May, just a couple of months ago. Well, we all know what happened in May. The start of the true depths of crypto winter happened. Terra Luna came crashing down, and then on June 16th, Vauld sent a company email that said the company would, quote, "continue to operate as usual." June 21st arrives with another cause for concern. 5 days after saying that they're going to continue operating as usual, they've announced a 30% cut to their employees. And see, that's where you start to get in trouble. Now, shortly after that, Vauld's CEO is loud and clear that there is no crypto contagion going on. In a tweet, he said, quote, "We've sent an email about this. We do not have direct exposure to 3AC or Celsius. Full disclosure, 3AC was a seed investor in us since 2020, who we facilitated a complete exit in December of 2021. Instead of bad debt or staked ETH or anything in particular like that, they're claiming volatile market conditions." They said, quote, "Volatile market conditions, the financial difficulties of our key business partners inevitably affecting us, and the current market climate." But you don't have to be a rocket surgeon to understand that even if Celsius or 3AC weren't directly involved, their difficulties have bled over and are affecting the greater market at large. 3AC's assets, which were used for collateral all over the place, went from $560 million to $670. And Nexo is looking to acquire Vauld. Nexo and Vauld have signed a 60-day exploratory period, basically to figure out what kind of acquisition would look like. If it works out, Nexo would own up to 100% of the platform. Vauld's CEO said, quote, "Operating under the Nexo umbrella puts us instantly in a position of strength to continue the execution of our fiduciary responsibilities to our customers and at the same time to execute upon both companies' ambitious roadmaps regardless of the market conditions." Personally, I take this whole thing as a really good sign to get your money off the exchanges. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I'll stop talking. Now, you stay safe out there. Watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.